Okay, why stocks are a better investment than real estate? Oh, if there's one topic that gives me a boner, it is this topic. Because I really firmly believe that investing in stocks over the long term is a way better investment than any piece of real estate. And let's go over why. Now, I get told by my dad all the time to sell my stocks. I love my dad, but he's wrong about everything. And this is why. For many people, real estate seems like the ultimate investment. It's tangible, you can see and touch it, and it's often seen as a safe bet. However, when it comes to investing for the long term, stocks actually have some significant advantages over real estate. Here are some reasons why stocks are a better investment than real estate. Number one, liquidity. One of the biggest advantages to stocks is their liquidity. Unlike real estate, which can take months to sell and require significant effort to manage, stocks can be bought and sold within seconds. This means you have more flexibility and can react quickly to changes in the market. There's also number two. Now, here's the thing about liquidity. I don't really ever sell. I'm a buy and hold forever kind of guy. I really am. So I'm just so diversified, it doesn't matter at this point. But let's go over the number two, though. Diversification. Another advantage of stocks is the ability to diversify your portfolio. With stocks, you can invest in a range of companies and sectors, which helps to spread your risk. Real estate, on the other hand, is often a concentrated investment, meaning you have all your eggs in one basket. Also, number three is lower transaction costs. Buying and selling stocks is generally much cheaper than buying and selling real estate. With real estate, you need to pay a range of fees, including real estate agent commissions, legal fees, and closing costs. With stocks, you can trade through a low-cost online brokerage and pay minimal fees, which is kind of nice. That's why I think that, like, for me personally, I just think that there's way more benefit with, as far as long-term games are concerned, if you were to, like, compare, like, I don't know, the S&P 500, which is, the S&P 500, by the way, is a collection of 500 different companies. But if you invested in those equally, as compared to like one piece of real estate, or even a diversified amount of real estate, you would find that the gains comparatively are huge. Now, I still think real estate is great to protect yourself against inflation. I still believe real estate is a necessary, and you should never like stay out of it. You should always get into it, because I'd rather, I mean, if home prices go low, start buying, Anyway, but yeah, it really is cheaper to buy stocks, and you don't have to borrow money. I never have to borrow money to buy shares of US Bank. I never have to borrow money to buy shares of Bank of America, Coca-Cola, fabulous companies, McDonald's, 3M, Texas Instruments, Intel. Well, Intel I still think is a good company. I don't care what anybody says. There's a lot of fear in the market on it, but whatever. Anyway, number four, let's keep going, is better historical returns. Over the long term, stocks have historically outperformed real estate. According to a study by Motley Fool, between 1975 in 2015, the S&P 500 had an average annual return of 11.4%, while residential real estate had an average annual return of 4.3%. While past performance is not a guarantee of future returns, it's important to consider the historical data when making investment decisions. So, yeah, I don't know. It's just like, I don't know. Anyway, that's why I still think that over the long term, you're better off being diversified in stocks, at least great companies overall. You don't want to be diversified in shit. You want to be diversified in good stuff. But you still should have real estate, though. I firmly believe this. I have REITs, which are real estate investment trusts, like Realty Income and WP Carey. I love them. They're companies that have a lot of real estate, and I think that that's a good asset to have. I really do, especially if you're leasing it out, man, because you could turn that real estate into a productive asset. Anyway, let's continue. I got to stop interrupting my script. All right, number 5 is less maintenance and management. So here's the thing. Investing in real estate requires a significant amount of maintenance and management. You need to deal with tenants, repairs, and ongoing maintenance. With stocks, you don't need to worry about any of this. You simply buy and hold your shares and let the company management take care of everything. Now, here's the thing. In conclusion, while real estate is often seen as a safe and tangible investment, stocks have some significant advantages over real estate. They offer better liquidity, diversification, lower transaction costs, better historical returns, and require less maintenance and management. Of course, every investment comes with its own risks and rewards, so it's important to do your research and consult with a financial advisor before making any investment decisions. It's always your own risk, by the way. This is all educational entertainment purposes, but I'm going to speak off the cuff. So, the thing is, man, when you're buying stocks, if you're buying great companies, you are buying great companies. You are actually buying companies. You are becoming an owner of a company. Now, do I like real estate? Sure, I do. I'm not going to completely dog it. It's still a valid investment. It still has a real store of value. My thing is, what I believe personally is that owning a company is far more value, at least owning a company that's productive, that's really good. It has profitability, is well established, has tons of systems, blah, blah, blah. I think that there's more of an advantage to owning a company because what is a company? It is a productive asset. Real estate by default is non-productive, but it can be a productive asset if utilized, like leasing it out, for instance. You can lease out real estate and turn it into some sort of valuable productive asset. But it is flexible in being a potential. It could be a potential productive asset, but typically reigns on the side of a non-productive. So real estate does have flexibility, which is why I would rather own I'd rather own a ton of real estate than a ton of cash. I'll tell you that. I'd rather just, I don't know. Cash is worthless, and that's why I continually invest in companies that have low PE ratios and that are good companies. PE ratio is not the only metric I look at, but PE ratio is a good gauge, at least a decent gauge if you know the company's already good by looking at their financial statements. It's just kind of a smaller measuring stick just to see how overvalued a company is. Price over earnings is solid. Anyway, I'm going off on a tangent. I hope you found this all very educational. Now, if you're in real estate, I'm not telling you to sell your house. I'm not telling you to, you know what I mean? I'm saying that it's good to have both. I say invest in stocks heavily. They're a little more volatile, I'll admit. Stocks are way more volatile, but they are a productive asset. And I think that people underestimate the power of owning a company. Look what rich people do. Rich people are constantly buying into stocks because they know that it's better to own a great company than it is to own a great home. That's just all there is to it. Now, I say it's good to do both. I just think that one's better than the other, that's all. I still think both are valid investment instruments, and that's something you should still do. I love it, man. Anyway, I feel like I'm trying to go on an apology tour for my love of stocks, but anyway, thank you guys so much for your time. I love it here. Love doing it here. But I am on a recording spree right now, and I'm having a blast. Anyway, later, everybody. Hee hee.